Let's start commodities now, where we have seen a bit of a rebound coming in the international markets, at least for the precious metal prices, where gold is holding around that 1380 mark on your screens, nearly a percentage point of a gain coming in. It has been very volatile, 1390 right now on your screens there, while we had seen levels of around 1330 as well in the New York markets yesterday. Today, of course, seems to be a positive day for both gold and silver prices, where silver also is holding 0.5% on the higher side in the international markets. The Indian markets, of course, have not been able to match to those kind of gains because of rupee appreciation. So there is on your screen 0.2% of a decline coming in for gold MCX, and the same is the case for the silver MCX as well, where you have seen declines to the tune of 0.2%. So 100 rupees down, 43,500 rupees on the prices there. Some bit of a rebound is what you have seen in case of energy as well. So nearly 0.25% up in both those spaces. NYMEX and the Brent crude prices are trading with healthy gains there. No such luck for the base metal prices, which have continued to decline for a 6th or 7th straight session. Every rally has seen a bit of a sell-off coming in for those markets there. Let's get in there. Anurag Singhai, he's CEO Technicalera.com, and he joins us live on Indore phone line. Anurag, hi, welcome. Let's start with the gainer first. And the precious metal space has seen some smart gains coming up in the European session right now. What's your sense? Is the US session going to follow it on?
Good afternoon, I'm Manisha. Thanks for having me. As you put up very categorically that, both in the international market have seen the definite rebound. But we have seen that after a very big fall of $1,500 breach of gold, we have seen the weakness is really sustaining. And technically speaking, I think weakness is definitely here to stay in the precious metal. Since no bigger fall, since this fall has come so swiftly. So I still believe every bomb rises. Hello?
Sure.
Hello.
Anurag, also, what's your sense coming in for the silver prices in the Indian markets now?
Well, Manisha, I believe that for the last at least 4 sessions, I think COMEX silver is not able to surpass $24 mark. So I believe that any rise towards maybe 43,750 or 44,000, it's a sail on rise with a stop loss of 44,500 for a lower side retest of 42,750 or 42,400.
All right. Well, let's take a look at the equity markets as well and the kind of reaction that we have seen coming in, especially on the T stocks. They're very sharp decline, especially on Mcleod Russel, which is down nearly more than 7% on your screens right now. Aditya Khetan, MD Mcleod, now joins us live on the phone line. Mr. Khetan, hi, welcome. I mean, the tea prices in the international markets perhaps have seen a bit of a decline coming in. What would you attribute the kind of declines that we have seen today?
Well, I like to clarify 2 things. One is that Mcleod Russel has a total production of over 100 million, out of which 80 to 85 million comes from India. The Kenyan market has come off in the last couple of weeks, but because they've had a good first quarter in terms of their production figures, but there is no direct bearing because the Kenyan teas being produced are not being imported into India. India has its own fundamentals of demand and supply, and the way we look at it is that the opening levels here in India will have its own price levels to determine, seeing the crop production in the month of March and April. Last year, the market went into a very strong drought period in the month of March, April, May and June, and we ended up opening the levels at around 20 to 25 rupees higher than the year before. This year, what we are seeing is that the new season teas are yet to come in the market, but whatever teas that have been sold in the month of April is in line with the last year and in fact even higher to some extent. What I would also like to clarify is last year, we ended up losing around 6.5 to 7 million kilograms, which increased our cost of production by over 10 rupees. If this year, with better rainfall and better climate, if we are able to recover the 6.5 to 7 million kilograms, there would be increase in revenues to a tune of around 10 rupees. Being a fixed cost industry, our crop increase has a direct relation to our cost of production. So basically, the fundamentals of the Indian tea industry is pretty sound. The opening inventory levels is close to 150 million kilograms, and which is at the all-time high.
Okay.
And we are expecting the market to open and settle at around last year's prices.
Okay. Mr. Khaitan, as you pointed out, the new season is about to start. So what kind of prices are you looking at in that sense?
Well, the way we are seeing the trend, the opening levels of the private sales that we have done are at least 10 to 15 rupees higher than what it was last year. And last year, as I explained earlier, the market had jumped 20 to 25 rupees due to a shortage in crop. This year, we are expecting the first quarter crop to be better than last year, and also the prices to remain slightly higher than what they were at the same time. So fundamentally, nothing has changed. I think this is a more of an overreaction to the Kenyan prices, which has no direct bearing to India, since there is no import of tea from Africa into India. Our Mcleod Russel exposure in Africa is towards Uganda, and I can say that up to end of March, we are at a higher production base compared to last year, and our to-date prices also are higher than what they were at the same time last year. So fundamentally, nothing has changed. The demand is still stronger than supply. There is obviously a surge in the Kenyan market, but that will have no bearings on the Indian market at any stage.
Mr. Khaitan, apart from the tea business as well, there have been some rumors in the market that perhaps Mcleod Russel or the group company has lost crores of rupees in the current commodities downslide that we have seen. Is there any truth to that?
Please, I would like to clarify that we don't do any trading of commodities. There has been no loss from our side or any of our group companies. So please, I would like to reiterate that whoever has spread this or wherever you've heard this from is baseless and has there is no truth to this at all.
Mr. Khaitan, what would you attribute to the prices declining or your stock prices declining nearly 15% in last two trading sessions itself then?
I have no logical reason to explain. We have always been upfront in terms of what we say. Fundamentally, nothing has changed in the Indian tea market. Fundamentally, nothing has changed in the overseas market. We are looking at this year to be better than last year with whatever signals we are seeing, and we are very bullish in our sector and are going to be investing further.
Milan Bhavishi, Head of Commodity Research of InVenture Growth and Security, joins us. Milan, good afternoon to you. Thank you for joining us. What is your view on gold?
What we saw in gold earlier this week was like harakiri. The prices slumped down and broke key support levels. Technically, the broader term trend is down. The sharp fall that has come in gold can ignite physical demand from key buying nations such as India and China. However, physical retail demand will not be enough to reverse the trend in the gold, but it can just bring a technical bounce up. For the trend to reverse, in the short term, fundamental factors could come in. Technically, gold is now trading in an oversold zone, so either a bounce up or some kind of consolidation can be expected at current levels. On intraday charts, gold is in the process of forming some double bottom, and so this could initiate some buying interest and in the metal at current prices. On MCX, gold is a buy around 25,350 levels for the target of 25,650, and stop loss can be placed at 25,250 levels.
And what about your views on crude?
On one hand, US crude oil consumption is decreasing, and on the other hand, production is rising. This has put pressure on crude oil prices, which are now trading below their 200-day moving average on NYMEX. Lower crude oil prices show that the demand scenario is weak, and it is no surprise that IMF has cut global demand forecast for 2013. Technically, crude oil prices are trading in an oversold zone, so some kind of bounce back can be expected. So this bounce can be used to sell crude oil on rise. Sell crude oil around 4730 levels for the target of 4650, and stop loss can be placed at 4755 levels.